Okay, so by now you guys have probably watched another few YouTube videos already about the upcoming Airbnb IPO, and I know I'm fashionably late as always, but better late than never, right? So if you guys want to hear my opinion on Airbnb and what my game plan is for the IPO, please stick around and I'll explain whether or not I'm buying the shares personally, yeah, this is the video for you, so let's jump in. Okay, so I'm just going to jump straight into it today. So I assume most of you already know what Airbnb is, so I'm not going to waste time explaining the background of Airbnb and what they do. But I did actually make a video a while back explaining all of that. So if you're interested and you haven't watched that video already, I recommend you go back and watch that video and come back to watch this video. So let's jump into some news first surrounding the IPO. Originally, the shares were priced at around $44 to $50 a piece, which has now been up to $56 to $60 per share because of the high demand. And quite frankly, at this point, I wouldn't be surprised if they upped it one more time before the IPO tomorrow. And now at around $60 per share, this would give the company a valuation of around $42 billion, which I must say is not unreasonable for a company like Airbnb. Okay, now let's spend some time on the S1. So we all know that, first of all, this is a business that's been absolutely wrecked by the pandemic, okay? So if you look at gross bookings for like 2 months earlier in the year, they actually had more cancellations than bookings, which was just unimaginable before the pandemic became a thing, right? If you were to have a time machine, you go back to 2019 and you would say, oh, wouldn't it be crazy if Airbnb had a bunch of cancellations in 2020? Like, what if that happened, right? And nobody would believe you. But obviously, with the pandemic, the worst scenario happened, and now it's a thing. So if you look at revenue, of course, is also taking a hit. If you look at the top line revenues for Q3 of 2020, it's down about 22% since the same quarter last year. Now, with that being said, though, I still do like Airbnb for the long term. The matter of fact is, if you look at most stock these days, especially stocks in the tech industry, nobody really cares about what's happening right now, okay? So everyone's mainly concerned with the future growth of the company and the future revenues and what the company is going to be like in the future. So I think that the best days of Airbnb are still ahead of it. Now listen to what an analyst from Atlantic Equities, a gentleman by the name of James Cordwell, had to say about this stock. So Cordwell projects that the company can recover to about 90% of its gross bookings in 2021 compared to 2019 levels. And he's also projecting that the company can hit $4.3 billion in revenue in 2021 and $6 billion in 2022. Okay, so let's spend some time on the other metrics, which I think that aren't as important as the top line revenue growth, but to be complete, I think I should mention them as well. So I'm talking about, for example, the balance sheet. So if you look at the balance sheet, at the end of September 2020, the company had $7.2 billion in current assets. Now, current assets are cash and assets that they can quickly turn into cash if needed. And if you compare the current liabilities, their current assets is much higher than the current liabilities. In fact, it's more than their total liabilities. This is good. This is what we want to see, right? Because it looks like the company has a decent cash cushion that they should be able to weather the storm if things temporarily get worse. You know, if the pandemic has flared up again, or it has been flaring up again, right? So I think that Airbnb is very interesting with the regards that not only are they a tech company, they're also kind of a recovery play. So they're treated like a tech company on Wall Street, but they're also a recovery play. So if you're thinking of recovery plays, you're probably thinking of like airlines, cruise lines, hotels, right? Or traditional hotels, not Airbnb, where they all have these like fixed assets that's just lying around that need a lot of maintenance costs, right? So for example, if you're Marriott Hotels, you have a ton of unrented hotel rooms right now because travel demand has just fallen through the floor. So you have all these like hotels and you have all these empty rooms that you still need to maintain, right? You still need to maintain the building. So your operating cost is still relatively high compared to before because they're relatively fixed. But then your revenue just plummets through the floor. So then your margins just plummet. So then that leads to your income statement and your balance sheet just looking really poopy, right? So this is kind of like the reverse leverage that I was talking about with gold mining stocks the other day. So be sure to check out that video if you haven't checked it out already. But yeah, essentially, if you're Airbnb, you're noticeably better off because you don't actually own and maintain the properties yourself, right? So you don't have a large amount of fixed costs that you have to deal with that's just lying around, and the balance sheet actually looks pretty good. So let me dive back into the balance sheet for a second here. So notice this line that says unearned fees. Now I talked about this in my videos about Carnival Cruise from like way back in the day, which sometimes if a company has to collect a fee or a deposit from a customer and is just holding the money until something happens, it is recorded as a liability. So for example, if I'm Airbnb and I charge you a fee, but you have the right to dispute that fee up to a certain date, or it's just a deposit, I'm just holding on to your money for now before I earn it. Well, I can't count that as my revenue just yet, because what if you do decide to dispute, or if you just want your deposit back and then I have to return the money to you? You get what I mean, right? I haven't earned the fee yet, and I don't get to earn the fee until there's like no chance that I have to give it back. So what's interesting in this case is that it actually goes in as a liability from like an accounting perspective, even though technically it's not the way that we think of when we think of a liability, right? It's not like a debt. So if you give me $100 of deposit for a service, that's logically different than me borrowing $100 from you from like a debt or something, from like a personal loan, right? Although from an accounting perspective, again, as I said, they're both recorded as liabilities and they both have to go in the liabilities column. So my point is that this is just like an accounting thing, and I think it's even okay if we just take out this entire line completely that says unearned fees. And if you do that, the balance sheet looks even better. Now, lastly, looking at the net income and EBITDA, it's kind of all over the place, okay? So you can see that there's a bit of a cyclical element to this stock as well. As the summer months tend to be the most profitable, while the quarter from January to March, i.e. winter here in the northern hemisphere, it tends to be the worst performing season, right? So obviously 2020 is skewed because of the pandemic, but usually that's how it works. Now, I'm not too concerned about profitability right now because a company like Airbnb, who's like super high growth, and it doesn't matter that much with profitability, right? But I have to bring this up because we're coming into the winter, and Airbnb reports this quarter in sometime in January probably. So it might not be so nice once they report because one, is the winter month, and two, we are in the second wave of the Roni situation, right? So those two things combined, I think, is shaping up to be a tough quarter for Airbnb when they report in January. So I don't know, maybe we'll see a pullback in the stock then, right? So, you know, all I'm saying is that if you don't pick up the shares that you want for the price that you want at IPO day, maybe there's still a chance to pick up these shares for cheap in January when the IPO hype dies down and when the next earnings report is released. Or people might not care and the stock could just go up forever. Who knows? Don't listen to me. I'm just some guy on YouTube, right? But I'm just saying, right? I just gotta warn you guys of this potential upcoming hurdle that Airbnb has to go through. I do want to touch a bit more on the risk side of Airbnb though. I know you've heard it from other YouTube videos already, and I know you heard this a million times already, but you know I gotta mention it as well. And a major risk of Airbnb is, of course, the regulations. So here in Southern Ontario and in the Toronto region, I can tell you that Airbnb has been causing a fair bit of controversy in the past few years. In fact, I believe that Toronto has passed a bylaw that requires the owner of the property to register that property as their primary residence before they can turn it into an Airbnb. So the reason why there's this rule is because when Airbnb first started getting popular, you had all these companies and rich real estate investors just kind of get together and just buy up as much real estate as possible and turn them all into Airbnbs and kind of start their own makeshift hotel business. And this was really profitable and people made a ton of money doing this, but it just drove up real estate prices like crazy, right? And if you're in a place like Toronto where real estate demand is already really high and supply is already really low, it contributed even more to the supply shortage of real estate. So that's why the prices went up, right? So you can bet that Toronto is not the only place though that has this problem. And let's just say that the government does not like Airbnb. So if you're looking into investing in Airbnb, that's just another thing that you're gonna have to deal with. That's okay for me personally though. You guys know I invest in a lot of companies that are hated by the government. For example, you guys know I've been a Facebook shareholder for the longest time. And it seems like every day the US is telling Facebook to cash me outside. So it just seems like something that you're gonna have to deal with if you're invested in companies like Facebook and Airbnb. So it's just you're gonna have to emotionally be able to handle it. It is what it is, right? So this brings me to my personal plan for what I'm going to do for the IPO. So am I buying the IPO? well, doing some quick math, if the company is valued at 40 something billion dollars of market cap at around $60 per share, if you're buying in at $60 per share, you're buying in right around a 10 forward price to sales ratio. And unfortunately, let me just say that there's almost no chance that this company is going to stay at $60 per share when it opens. Okay, so if you just look at what happened today with DoorDash, well, the stock went up 85% after its IPO. So arguably, Airbnb is even more well known than DoorDash. So I feel like the excitement with Airbnb is much more. So I wouldn't be surprised if the stock opens at like 120, right? At like double the original valuation. So I'm telling you right now, if the stock is $60 per share actually, and like us as retail investors are able to buy for $60, I'm loading up the boat. But you know, there's almost no chance that's gonna happen. So what I'm gonna do is I'm gonna set a limit order for maybe around a $2,000 to $3,000 position for maybe like $85 to $90 per share or so, which would give a valuation of $60 billion or a little more than 60 probably, and a forward price to sales ratio, for around a 13. So I think that anything above a 13 in terms of PS is a little bit rich for me, for my liking. So I think that I'm comfortable at like, you know, maybe $85 to $90 per share, or maybe even 100, but like 100 is probably my absolute max. But I must say that I'm not expecting my limit order to be filled. I do believe that it will open higher than $85, but yeah, who knows? I might get lucky, you never know. So what are your plans for the IPO? Let me know down in the comments, and I'll leave the video here for today. Be sure to hit the like button if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye bye!